Tesla's up 4.5% today, pushing up to $190, and I was unfortunately not able to trade it as I was in jury duty all day, but I got back to my office and now we're sitting here at 190, looking like we could potentially test $200. And so we're going to look at the daily chart. We're going to look at some order blocks that are sitting, one up here at 210, see if we could potentially push up to there. But what I really want to go over is this potential setup for the continued move down to 170. Now, I'm going to preface this video for those of you who aren't avid watchers of the channel that I am a long-term investor in Tesla. I don't plan to buy any more shares until maybe 160. But a lot of people in the last video were asking me to do a fundamental video, a long-term video on Tesla, which I do plan to put out. I'm putting that video together, probably be out by the end of the week. But a lot of people are asking me, hey, if you think the Tesla could fall down to 170, 160, why aren't you grabbing puts, or do you plan to grab puts? And so I want to cover that in this video as well, since we do have a pretty bearish setup that's kind of happening here. So let's look at Tesla at this moment. This is going to be a daily chart, and the indicators that we have up right now is going to be just a B%B, and then the Smart Money Concepts by Pinewave, which is a premium indicator if you're part of the premium Discord community. But you can just use Lux Algo or any other indicator that goes over order blocks, or you can just draw them yourself, which we have a couple of videos showing you guys how to do. And I do actually plan to do a free course kind of seminar showing you guys how I like to draw order blocks and trade off of them. But right now, you're going to see that we have this gap down off that $200 level right through 195, and then opening here the day after earnings at 189.72. So this results now in a change of character now that we took out this low back here. And now in this type of change of character, we're very bearish usually. There's a chance that we get bought back up into this 206 level, but we have the change of character and a potential inverted cup and handle. So I do think that while we may retrace back up into this $200 level, I still think that there's a good chance that we could see this push down to 167.36. And if you notice, when this change of character happens, over the past 200 trades at the top right of your screen, we have been right, or it has hit our target 175 times, while hitting the losing or the stop loss level, in this case, $205, 60 times. So just from a statistical perspective, this is already in our favor. Now, when it comes to order blocks, we have two of them, one more recent sitting here between 215 and 209, and another one from all the way back here and Tuesday, May 16th at 169 to 165. Now, when it comes to order blocks, the more recent the order block, usually the faster we will retrace back to it. So I do think that there's a higher chance that we might actually test this block first before moving back down to 169. Now, the way that I would really like to set this up is to look to go short at about $200 if this happens, setting a stop loss over 218 with a take profit down here at 170. Now, based off of just how I have this set up, our stop loss would statistically off of those numbers up there be based off of 208 to 209, but I would want to give this block a little bit more time to play out, because what tends to happen here is we'll see this pullback into this level so that all of these sell orders can fill and we can get another leg back down, because all an order block is showing is that all the people that wanted to get in here before that drop were unable to fill their orders. And we're talking about massive institutions and hedge funds, not retail traders like ourselves. So that's why we'll usually revert our way back up to this level, which will be met by a ton of selling pressure and then usually a sell-off back down to a lower low. So if we look to go short at $200, we could set our stop loss traditionally here at about 207 with a take profit down at 169, which would give us a very, very good 5-to-1 risk versus reward. But in my opinion, if we push back up and we do hold over 200, there's a pretty high chance that you're going to get tagged out at 208. So if you wanted a higher probability of profit, you could pull this up, which is ultimately going to give you a worse risk versus reward, which for any investor or trader, that's just the laws of the universe. You're either going to have higher success rates with lower RVRs or much lower success rates with higher RVRs. In my case, I really would be wanting to look to potentially go short and set it up like this. And really, if you wanted the best entry price possible, you would look to go short all the way up here at 210 in the middle of the order block, setting your stop loss at about 219. Really depends on how patient you want to be and if you really want to solidify the fact that you can get into the trade based on your conviction. There's this misconception a lot of the times that people think like, oh, you should just wait for the best entry. And yeah, I mean, like, you should wait for the best entry, but if you're somebody who's going to be living off of the market or want consistent returns just monthly, you need to make sure that you have enough setups to reliably bring yourself sustainable income. If you have a massively high win rate on some great pattern or some setup, but it only happens 2-3 times a year, it's probably not the smartest thing to leverage your entire account in that trade so that you could actually make enough money to sustain yourself and live. So you really want something that's consistent, that's always going to be there, and especially in every type of market. Because if you only have a trading strategy that works in an up market and the market's not going up, you're not going to make money. You could also not lose money, which would be great, but this goes into the business of being a full-time trader and portfolio manager. So for me, I really would say if you want to go short, I'd be looking at $200. I'm not entirely sure if I really want to do that, but if price action pushes back up to 200, starts to reject, we end up rejecting on this ATR trailing stop, I might go short with a small amount of money, maybe get some monthly March puts profits or something like that. And as I said before, as far as my long-term level, I'm really looking at $165. We have this order block level I think we'll probably eventually pull back into. Like I said, we could see 210, 208 first, but I do think we'll probably see this push back down to 170. I hope so. And as we said before, if we do start to move our way back down to 165, I will definitely be purchasing shares long term. Probably not that much. You guys will see in my fundamental analysis video coming out this week what my targets are for Tesla. I have 3 buy targets. One of them I'll tell you is 165 based off of fundamentals. And then my other one is down at about $85, which I don't think we'll see, but we're going to go over that in detail. So make sure you subscribe to the YouTube channel. Thank you guys for all of the support. If you want access to all my trades, check out the second link in the description. You get access to all my trades, all of our trading bots, which we have over 50, all of our courses, seminars, webinars, and much, much more. It's the second link in the description to join our Discord community. And if you guys have any tickers that you would like me to cover on this channel or any companies you would like me to do a deep dive on for a long-term perspective, please let me know in the comments section, as I would like to engage in more companies and more stocks in the next couple of months, as opposed to just only making Tesla content. Thanks for all the support, guys. I'll see you next time. Peace.